Hello, very good morning to all, and welcome to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Today will be Tuesday, the 15th of April, 2025. So as usual, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we kickstart into the gist of today's daily dose, which is the intraday technical outlook, let's have a quick recap and what has taken shape yesterday in terms of news flow, economic data release, and as well as their impact on the intraday performance of the various broad-based cross-asset classes. So let's start with the performance of the US major stock indices in the first instance. All right, so what you could see over here is that yesterday the major US stock indices, all of them managed to close in the green. The SPX is up by 0.8%, the Nasdaq is up by 0.57%, the Dow Jones up by 0.78%, almost on par with the S&P 500. Intraday performance gain, which is 0.79% for the SPX. The Russell 2000 outperformed by 1.1%. So if you look at the performance of the major US stock indices, they continue to actually buzz in the positive tone or territory, but however, their movement is not so linear as in the way the price action move. So you look at the intraday performance of the SPX 500 over here at the opening, yes, it gap up. After that, the prices dwindled to actually hit a session low of 5,358, totally erasing off the earlier so-called gap up price action. So this earlier gap up price action was due to the fact that, as I mentioned, over on late Friday, Trump administration, US White House administration mentioned that exemption for consumer electronics product on the US reciprocal trade tariff. That means that 120+ tariff that US imposed on China. Those particular semiconductor, smartphones, laptops will be exempted from that 100 over plus tariffs that US imposed, and also against the rest of the world, depending on where are their so-called specific reciprocal trade tariff rate will be. But however, if we look at the price section on the S&P on a so-called the raw price section, it actually formed this kind of hanging man. All right, so this is a Japanese candlestick technical analysis. So earlier it gap up. Okay, so this was Friday, gap up, have an intraday high of 1.79. Then after that, it dwindled to only a gain of 0.79 and ended with this bearish hanging man candlestick formation right below the 20-day moving average that is acting as the resistance at around 5,500 level. All right, so this is not a rather positive price action as per se, and also why this price action is not positive is because of there's a lot of uncertainty regarding different brackets of trade tariffs. We call it a measure that the current US White House administration wants to implement. What do I mean by that? So if we look at yesterday's, there's this positive, we call it a news flow as well. Okay, 1 second. Where was it? Yeah, this one. Yeah, this is the positive news flow that also lead to this gap up in the US session at the opening yesterday, where Trump himself mentioned that there's some kind of temporary reprieve for automobile sectorial tariff. So Trump himself actually hit this universal sectorial automobiles tariff on 25% of them on fully built vehicles. That means we're talking about fully built automobiles, be it van, car, or lorry heading into the US, and as well as some duties on automobile parts that is set to take effect no later than 3rd of May. So yesterday he mentioned that he could offer some kind of reprieve on this or pause on this 25% tariff, but no exact date that's being done. And what's interesting over here is that in the middle part, towards the later part of the US session, there was actually a news flow, a negative one, stating that Trump initiates chips and drug probes. The chips, that means semiconductor, drugs will be a pharmaceutical product. Probes based on national security concern, and that could actually potentially, okay, over here, initiate trade probes into semiconductor and pharmaceutical imports, which could lead to tariffs and broaden the US trade war. So basically, up and coming, yes, even though Trump on Friday mentioned that so-called temporary pause on that semiconductor, smartphone, and whatsoever consumer electronic trade tariffs exemption on the very global US reciprocal trade tariff. But however, this exemption will be temporary because right now he actually ordered a probe into these two specific products, semiconductor and pharmaceutical imports. That means potentially up and coming, there could be different sectorial tariffs that could imply specifically only to those two key products. So what we could see over here is that in this coming year, there will be various kind of trade tariff uh, implementation scheme apply to different rules and criteria, and because of these different rules and criteria, there's a lot of uncertainty going on, and potentially we will start to lead to what I call a lot of whipsaw movement in the major cross asset classes, and most importantly, they start to show conflicting signals as well. So what do I mean by conflicting signals? Number one, the US, we call it exceptionalism team play. Since Trump has taken office, those have started to dwindle off. So, but not being shown very clearly on the stock market yet because of the positive performance if you look on the surface, but it has not been shown very clearly on the FX market. So if you look at the FX market as per se, the dollar continues to remain rather weak right now. So this is the 5-day rolling performance of, as we are speaking right now, of the dollar against the rest of the other major currency. So if you look at it, here's that the dollar continues to trend downwards. And what's interesting over here is that if you look at the US dollar index as a measure of so-called dollar general performance. So this is the current month performance of the US dollar index, means month to date performance as of for the month of April, as of 15th of April. So April hasn't ended yet. We know that it's close to about 10 more days to go or so, but it's now showing a 3 consecutive monthly decline. And the current price of the dollar index, which is now at 99.71, is the lowest level since February 2017. All right, so that is a significant low that the dollar index has already hit over here. That means there's more than we call it close to about 6 to 7 year low. So going forward over here is that the all important level to watch out for is testing yesterday at the major swing low of 3rd of July 2023 that managed to see 2 years of dollar rally. That if this level starts to break down, which is 99.60, potentially we may see further weakness towards 96.40/95.15, which is a very important key long-term secular support level, because this is the long-term secular ascending channel, a lower boundary from 2011 low, which is over here. All right, so if it starts to break down below this key long-term pivotal support zone, 96.40, 95.15 on the US dollar index, then potentially we may start to see dollar weakness, further significant dollar weakness, due to market participants are getting very uncertain on how important policy that coming out from the White House administration that is going to be implemented, more primarily focusing on that uncertainty surrounding the different kind of buckets of trade tariffs, the rates that they want to hold, and also that stagflation risk that could be rising day by day in the US economy. So that actually also market is now looking for that risk. So that's why you see the dollar selling off in the past 3 weeks or so, or in fact in the past 1.5 months, I would say. All right, because the significant dollar sell-off took shape in the month of March. All right, so with that, we start to see also very positive we call it performance in gold price as well. So gold price yesterday, despite a minor drop of 0.8%, but they're still holding above our key short-term support level, which is 3,168. And in today's Asia session, they attempt another fresh bullish intraday up leg, up by 0.5% as we are speaking, which is at 3,225 over here. All right, so then what we could see over here is that interestingly, flipping back to the FX market over here, based on this 5-day rolling performance, what's stunning to me is that the Aussie dollar continues to remains, we call it immune from that potential trade tariffs uncertainty that could drag global growth into more either into what I call it a weakness or potentially a recession for most of the developed nation, especially in Asia, where we are pretty much dependent on export. But however, it's not reflecting as a risk off, risk on high beta currency, but instead is now joining the bandwagon with the broad-based dollar weakness. So the dollar is weakest against the Aussie, which is based on a 5-day rolling performance basis, is down by -6%. The Kiwi dollar is also being we call it reinforced by this Aussie strength as well, where the dollar weakened against the Kiwi by -6%. So let's see how it continues to play out, because right now is the Aussie dollar is actually fast approaching that 0.64 key medium-term pivotal resistance. So later I'll share with you what are the key intraday short-term level to watch when I cover the intraday technical outlook on the Aussie dollar. And last but not least, WTI crude oil price. So no big change on WTI crude oil price. So WTI crude oil continues to trade within a range, but holding above our key short-term pivotal support at $58 per barrel for the West Texas crude oil. So it's going to hover between $61 per barrel to $63 per barrel within this range itself. All right, so with that, now that I covered the first portion of today's daily dose, which is the important news flow event that has taken shape yesterday, that has then as well as their impact on the broad-based cross asset classes. So without further ado, let me now expand my screen and I will cover the second portion of today's daily dose, which is the intraday technical outlook on the broad-based cross asset classes. All right, starting with the FX market, pardon me. So let's start with the FX market over here. Okay, quickly, let's look at the chart of the euro dollar. So euro dollar continues to remain in a firm price action. So what I could see is that after last Friday or last Thursday's swift push up, a major bullish breakout above the long-term circular descending channel from January 2008 high over here, it starts to consolidate in a bullish pennant formation. Okay, so this is like a bullish pennant formation over here. Okay, let me change a different color. Okay. Okay, over here. So no change, continues to remain in a bullish dynamic or a short-term intraday bullish bias, and the RSI is also holding above a parallel ascending trendline support as well. So with that, maintain our intraday bullish bias with 1.1240 short-term pivotal support level. And based on a elliott wave perspective, we know that the theory, or in terms of how a triangle like consolidation plays out, they move in 5 waves: 1, 2, 3, 4, 5. So potentially if you look at such trajectory, the potential end of this bullish pennant may end around the middle part of the European session before staging another impulsive up move. So net overall, it shouldn't break below 1.1240. So this is still a key short-term pivotal support to uphold the potential intraday bullish bias based on the technical analysis that I kind of inferred to my best of knowledge on the euro dollar. So Next resistance level to watch 1.1480 slash 11520. Above it sees the next intermediate resistance coming in at 1.1660 slash 1.1690, which also confluence with a Fibo extension level. So this is could be the fifth wave, a minor fifth wave target over here, 0.618. This is 1, 2, 3, and that ongoing minor bullish pennant configuration, or some may call it a minor symmetrical triangle configuration as well, is the fourth wave. Okay, so after this fourth wave end, there will be an impulsive fifth wave to actually see it seeking out the 0.618, which confluence with our graphical resistance at 1.1660 slash 1690. However, if price action starts a swift down move and an hourly close and a breakdown below 1.1240 short-term pivotal support level, that remains for today. Today's intraday bullish bias will be invalidated to kickstart a minor corrective pullback or a minor corrective mean reversion decline scenario, exposing the next near-term support level at 111.50 and even 110.70. So net overall still maintain that intraday bullish bias as the euro dollar short-term configurations yesterday seems to be evolving in a bullish pennant formation, and this bullish pennant formation has two more legs to go, which is the leg D and E, followed by based on the elliott wave perspective. That means, i.e., potentially around the middle part of the European session, it could kickstart another minor impulsive up move as long as 1.1240 short-term pivotal support holds on the euro dollar. Next up will be the sterling dollar. So the sterling dollar trade at a much more bullish bias against the euro dollar, because the euro dollar sees a series of minor lower high. This one is similar high, and we start to see a very steep, we call it a higher high in the last 3 days or 3 consecutive sessions. So with that, we will still maintain an intraday bullish bias on the sterling dollar right now, with a tightened short-term pivotal support level at 131 figure level, which is this congestion area over here from this Monday and as well as last Friday over here. And if you do the Fibo retracement of this last steep up move from last Thursday all the way up to yesterday's US session high, that confluence with the 23.6% Fibo retracement level, as price action now trying to probe our resistance level that we highlighted yesterday, which is 1.3210. Above 1.3210 exposes 1.33110, which is what this level 1.33110 is the upper limit of this medium-term ascending channel that is still in place since the start of this year in January, 13th of January, and also a Fibo so-called minor fifth wave target as well, by taking the low, the start of that wave 1 of 8th of April, project it to the high of Friday, push it down to the intraday low of Friday. That coincides with the 0.618%. All right, above it is the fifth wave extension towards 1.3370 slash 33 1.3390, which is the 0.764. So what I mean is the minor one, minor wave 1, minor wave 2, minor wave 3, minor wave 4, and now doing that minor wave 5, which is the fifth wave target at 0.618, based on the elliott wave perspective. Only an hourly push down and an hourly close below 1.31 figure adjusted short-term pivotal support for today on the sterling dollar that would invalidate its bullish bias for today to kickstart a minor corrective decline or a mean reversion decline sequence to revisit 130.30 slash 29.80 and potentially 1.2925, which corresponding to the rising 20-day moving average. So i.e., in a nutshell, still maintain that intraday bullish bias using an adjusted short-term pivotal support on the sterling dollar at 131 figure for today. Next up, Aussie dollar. So I mentioned again, the Aussie dollar now is trading in line with broad-based general US dollar weakness rather than its higher beta currency nature, which is previously much more risk averse to global slowdown risk. All right, so over here it continues to be rather bullish. All right, so with that, the price action on the hourly RSI continues to trend higher above the 50 level mark. So what I do over here is that first support level to watch will be today's Asia session low at 63.15. pivotal support level for today will be this minor V-shaped rebound and forming a bullish hammer hourly candlestick during the start of yesterday US session, where that bullish hourly hammer bounced off the 50-day moving average, I think as a support level 6255. So 6255 will be my short-term pivotal support level. at the at the most maximum, I got to respect the 64 figure level, which is very important. So 64 figure level is my medium term pivotal resistance level, which will be my resistance level for today in today's intraday bullish bias on the Aussie dollar. Why 64 is important? Let me quickly bring you guys back to the daily chart again. So this 64 level over here is got rejected by the bulls on 20th of February, rejected on 17th of March, and previously rejected on 3rd of April. So this 64 figure level is indeed a very clear inflection level in the past. Why? Because it was also a former major ascending trend line that was way back from 13 October 2022 low, where the Aussie dollar trade in a we call it 2 years plus of sideways configuration before staging that bearish breakdown on 10th of December last year, the major bearish breakdown. So this turns, the 64 level turns into a significant major resistance level. Previously, it's a major range support level, right? So that's why the 64 figure level is important over here. So with that, only a push down and hourly close below 62.55, that would negate the bullish tone or invalidate the bullish tone for today on the Aussie dollar. For in order for the short-term bears to gain a foothold back into the Aussie dollar, exposing the next near-term support level in first step at 61.90/61.70 next. Okay, so that's for the Aussie dollar. Lastly, will be the dollar yen. So the dollar yen continues to trade in a sideways pattern as well. So this sideways pattern is, we call it a bearish pennant over here. Okay, let me put it. Okay, so look, a bearish pennant formation over here. A, B, C, D, E. So one more D wave followed by the E wave. So very likely there could be another sideways movement during the start of the European session thereafter. So by the middle part of the European session, that impulsive down move may resume on the dollar yen over here. So nevertheless, it still remains below the upper boundary of this potential minor bearish pennant formation or minor symmetrical triangle range formation. It's still below our short-term pivotal resistance that we have yesterday, a Titan one, which is 14430. So still no change using 14430 short-term pivotal resistance level. Still maintain this dollar yen bearish bias as it continues to play out the last two legs of its bearish pennant formation before another potential impulsive down move sequence that may unfold during the middle part of the European session today. Near-term support level to watch 14170/55. Below it says 140.30/140 figure level, important level, 1.236 Fibo extension taken from the high of 28th of March, and this 140 figure level is actually the key medium term swing low area of 16th of September last year. All right, only a sudden push up and a breakup with hourly close above 14430 short-term pivotal resistance that would invalidate today's intraday bearish bias on the dollar yen to kind of kickstart a minor mean reversion rebound sequence, exposing the next two intermediate resistance at 14580 followed by 14660 next. So that's for the dollar yen, still maintaining that intraday bearish bias using 14430 short-term pivotal resistance level. All right, so that sum up the intraday technical outlook on the major dollar pair. So let us turn our focus now to the major stock indices, starting with the Hong Kong 33. So the Hong Kong 33 representing the Hang Seng index over here. Yesterday, it managed to bounce, almost hit our first resistance level before it, yesterday, okay, this was, yeah, it hit almost hit the resistance level during the start of the US session. Then thereafter, it just traded sideways over here. All right. So what you could see over here is that the hourly RSI continues to still hold above the 50 level mark. So no change. The support level, the key support level to watch will be still the 21,040, which is the former minor range top of 7th of April. That was to 11th of April. Gap up in yesterday's Asia session now turns into a significant short-term pullback support level. So as long as 21,040 holds, I'll still maintain that intraday bullish bias on the Hong Kong 33 above 22,740 exposes the next intermediate resistance zone at 22,220/500, unchanged from yesterday's view as well. So however, if only a sudden push down and an hourly close below 21,040 short-term pivotal support level, that would invalidate the intraday bullish bias on the Hong Kong 33 to kickstart another round of choppy corrective decline sequence, exposing the next near-term support level 20,280. Below it says 19,900, which also corresponds to the key 200-day moving average. So net in a nutshell, still watching the 21,040 short-term pivotal support level on the Hong Kong 33 in order to maintain today's intraday bullish bias. Japan 225 up next, representing the Nikkei 225. So yesterday we do have a bullish bias, looking for it to float up slowly to the minor swing high area of last Thursday at 35,190, maximum 35,730, which correspond to the downward sloping 20-day moving average, acting as a similar resistance level as well. As the price action continues to actually churn higher over here, we see a series of higher high, higher low since last Monday Asia session high. However, it's not being in parallel with the movement of the hourly RSI, which starts to see since Monday's Asia session high a bearish divergence. All right, over here. Okay, it continues to see series of minor lower high, right, going against the price action. So what is indicated over here is that the upside momentum that is being seen at the start of yesterday's Asia session has started to ease off. So there's a risk that it may not start to float back up towards the 35,190/35,730 resistance zone that we highlighted yesterday in our intraday bullish bias yesterday. So with that, because in the middle of nowhere, I do not want to put any pivotal resistance level. So the first resistance level to watch will be this minor swing low here, which is very close to the current intraday session high, 34,700. Current day intraday session high is 34,460. Because if I put it this level here, we may get a bit of whipsaw, because the clear resistance level is still that 35,190/35,730. So this will be my short-term pivotal resistance for today. Flip to a intraday bearish bias on the Japan 225 in any form of any strength that we may see during the later part of the Asia session and into early European session, fade that strength using 35,190/730 short-term pivotal resistance level or resistance zone for today, flip to a intraday bearish bias. First support level to watch will be at 33,440, which was yesterday's pivotal support. Only a breakdown below 33,440 may open up scope for more further potential weakness on the intraday basis for the Japan 225 to expose the next near-term support level at 32,425. Only a sudden push-up and the hourly close above 35,730 will invalidate today's intraday bearish bias to see a further squeeze up towards 36,450, followed by 37,380. So that's for the Japan 225. Next up will be the Germany 30, representing the German DAX. So it continues to trade inside this kind of very weird sideways range configuration. So with that, we still maintain our neutrality stance, except that I adjusted the lower limit of the neutrality stance to be much more in line with the current price action, which is managed to be supported by this rising minor ascending trend line from the low of 9th of April, now turns into a key short-term intraday pullback support at 20,800, and this 20,800 also confluenced with yesterday's European session low as well. So having a tighter neutrality stance for today, upper limit remains the same at 21,610 level, but lower limit, I tighten it higher to 20,800 based on the current price action, watching the lower limit. So if it start to have an hourly close and a breakdown below 20,800, then potentially the short-term bears may gain a better footing to expose the Germany 30 to the next near-term support zone at 20,230/19,970, which correspond to the 200-day moving average as well. So maintaining a neutrality stance with adjusted lower limit on the neutrality zone for the German 30 at 20,800, upper limit no change at 21,610. All right, next up will be the Wall Street 30, representing the Dow Jones Industrial Average. So continues to be trade in a very minor kind of a sideways rangy formation, despite it's a push up, still below that 20-day moving average. So with that, we'll still maintain that intraday bearish bias with 41,180 as my short-term pivotal resistance level. First support level to watch will be yesterday's Monday session, Asia session low at 39,950. Only a breakdown below 39,950 may see further weakness on the intraday basis for today to retest last Friday Asia session low as well, and last Thursday US session low at 39,090. Only a sudden push up and the hourly close above 41,180 will invalidate today's intraday bearish bias on the US Wall Street 30 to see an extension of this minor corrective rebound sequence to expose the next key support resistance zone at 42,400/42,855. Pardon me, earlier on, that is the intersection between the 200-day and the 50-day moving average. So still watching the 41,180 short-term pivotal resistance on the US Wall Street 30 to maintain today's intraday bearish bias, but price action got to break fast below this intermediate support level at 39,950 on the Wall Street 30. Lastly will be the Nasdaq 100. So Nasdaq 100 continues to trade lower. So after the test on the 220-day moving average, pardon me, it shaped a bearish reaction. And after this bearish reaction, the RSI has also broken down below a parallel ascending trend line support that was formerly in place since 7th of April low, so indicating that upside momentum has been damaged on the Nasdaq 100 by the bearish breakdown of this parallel ascending trend line. And as it's now trying to trade below the 50 level mark. So with that, momentum has started to turn weak on the intraday basis on the Nasdaq 100. So still no change. 19,280 will still be my short-term pivotal resistance on the Nasdaq 100. First support level, to watch out for 18,580. Breakdown below it may expose further weakness towards 18,130 in the first step. So with that, still maintaining that intraday bearish bias on the Nasdaq 100. However, if we start to see an hourly close and a breakout above 19,280, today's intraday bearish bias will be invalidated to see the extension of this mean reversion rebound sequence extending to the upside towards the key resistance level at 20,350, which confluence with the intersection between the 50-day and the 200-day moving average. All right, so that sum up the intraday technical outlook on the major stock indices. Now let us now touch on the commodities market, starting with gold XAU/USD. So no change for gold, as gold XAU/USD continue to shape that minor pullback yesterday. Minor pullback hit our first support at 21,960, also in line with the low of last Friday, and also the pullback support of that former medium-term ascending channel from the low of late December last year now turns into a minor pullback support level at 3,196. So still no change because it can't break out above the current all-time high area at 3,250. We'll still maintain that short-term pivotal support level at 3,168. For today's intraday bullish bias on gold XAU/USD above 3,250 sees 3,280/290 next, followed by 3,325/3,335. Only an hourly close and a breakdown below 3,168 will invalidate today's intraday bullish bias to kickstart a minor corrective decline sequence, exposing the next near-term support at 3,135 followed by 3,094, which confluence with this rising 20-day moving average. That effect still maintain that intraday bullish bias on the gold XAU/USD, also supported by this bullish breakout from its parallel ascending trend line from this ascending former ascending descending trend line of the hourly RSI, indicating some form of upside momentum has started to creep back on Gold XAU/USD in the shorter term. So still maintain that bullish bias using 3,168 short-term pivotal support on Gold. All right. So lastly up next will be the West Texas crude oil, as it's going to trade sideways between 63.36 and our pivotal support level at 58.30. So still looking at this kind of range play over here. Lower limit of the range 58.30, pivotal support level. As long as this level will not surpass, potentially it may bounce back up towards 63.36. Only a breakout above 63.36 may see the extension of this minor corrective rebound sequence, exposing the next resistance level at 65.40, which confluence with this rising downward sloping 20-day moving average. Only a breakdown in hourly close below 58.30 will invalidate today's intraday bullish bias within a range scenario to kickstart another round of impulsive down move to expose the next near-term support zone at 54.50/53.80. All right, so that sum up the intraday technical outlook on West Texas Oil, and as well as the broad-based cross asset classes as well. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So today, during the European session, will be rather active. We have unemployment rate and unemployment change for UK coming in at 2 p.m. Singapore time. That could impact the sterling dollar and the sterling crosses. Then thereafter, you have the Eurozone economic sentiment index. They call it the ZEW economic sentiment index, that will be out at 5 p.m. Singapore time. So that could impact the Germany 30, the Euro dollar, and the Euro crosses. And thereafter, before the start of the US session, we have Canada inflation data out at 8:30 p.m. Singapore time. That could impact the dollar CAD and the CAD crosses. And thereafter, during the start of the US session, will be rather quiet. No tier 1 economic data release. 11:35 p.m. we have Federal Reserve official Barkin speaking at 11:35 p.m. Singapore time. Then thereafter will be a quiet US session. But last but not least, today we also have two key earnings out from US, which is Q1 US earnings from two key banks, Bank of America and Citigroup. They were reporting both their earnings before the opening of US cash market stock trading session today. So something to take note of as well, that could influence the movement on the major US stock indices, especially the S&P and the Dow Jones Industrial Average. Lesser extent to the Nasdaq 100, because these are not key component stock of the Nasdaq 100. All right, so without further ado, that actually ends today's Daily Dose of Market Insights. I'm Kelvin here, signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.